Global equity markets are in the doldrums with little confidence about a turnaround anytime soon. The Reserve Bank meets on interest rates today with the pressure on new Governor Michelle Bullock, and why service stations are introducing marshals to contend with fights between electric vehicle owners, so-called charge rage. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Tuesday, the 3rd of October 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Charge rage. I'm very intrigued by this story.
It makes a lot of sense, actually. I don't own an EV, but I often wonder how you get enough charge into your car, and a lot of people seem to be thinking about it. Anyway, for later in the show.
Yep, coming up a little bit later. We also later on have an interview. This is after the episode, and it's an interview between Jennifer Duke and EY's chief economist, Sherelle Murphy. It's a really interesting chat, actually, Sean, because it is all about how the weather affects the economy. Because while you were gone, the Bureau of Meteorology officially declared that we were in an El Nino weather pattern. And so we're really looking at kind of how that affects different sectors within the economy, and then also the impact of natural disasters, and also the long-term planning for changes to the weather and changes to the climate, and how that is going to affect the Australian economy into the future. So quite a broad conversation, and Sherelle has a real knack for communicating information like that.
I look forward to listening to it.
Now, the main story this morning, though, Sean, global share markets, including Australian equities, are in the doldrums, with markets in the US and locally down 7% and 6% respectively since their July highs. And there's not a huge amount of confidence about the next few months.
That's right. September really was a pretty awful month for equities. Aussie shares were down 3.5% for the month, and the market is now trading at about the level it began the year. On Wall Street, equities fell nearly 5% last month, and globally, shares were off nearly 4%. Now, the reason for the sell-off is that central banks around the world and investors now believe interest rates will stay higher for longer, something the Reserve Bank is likely to talk about today, and that's pushed up bond yields. In fact, the 10-year bond yield in Australia last week hit its highest level since 2011. As an investor, you can get a pretty decent return in close to risk-free bonds. That makes them relatively more attractive than other riskier assets like equities, hence the sell-off. Not helping is the risk of recession in the US and other places. Interest rates remain high. There's plenty of uncertainty around the Chinese economy, and oil prices are very high. Investors don't like equities when there's a recession coming, so the outlook isn't that good.
All right. So if I have this right, Sean, bonds are popular with investors and shares aren't, so share prices have been falling. Does this mean, though, that they will keep falling, or maybe there are a few bargains out there?
Ooh, you've been studying up. I've been away.
I have been doing. I thought, when Sean comes back, I really want to impress him. It feels like kind of when your teacher's returning after long service leave or something. You're like, I really want them to not regret coming back.
Yeah, it's a great question. Are there bargains out there, basically? And there are going to be sectors out there that are relatively cheap within the equity sector. Markets tend to oversell, and they also tend to overbuy. But to be honest, we're not an investment podcast, so I think it's better to answer that question by quoting an expert. AMP Shane Oliver believes share markets have been oversold and are due for a bounce. But, and this is a big but, the risk of nothing like a big but, Michael, would you agree?
I thought, you know what, I'm not going to comment on that, and you did. So I have successfully brought you down to my level. Welcome to the gutter, Sean.
Anyway, back to Shane Oliver. Share markets have been oversold, due for a bounce, but the risk of a further fall beyond any near-term bounce is very high. A lot of that is about the recession. Oliver is positive on shares over the next 12 months, but, I say that again, but the road could be rocky.
All right. How did local markets perform yesterday?
Well, there wasn't much going on, with a chunk of the country closed for the Labor Day weekend. Well, New South Wales, the ACT and South Australia marked Labor Day. Queensland was actually closed for the King's birthday. Do you know what Labor Day is about, Michael? I was just interested.
I don't.
I remember studying industrial relations years ago and learnt about it. And then when I was thinking about it yesterday, I thought, I wonder whether people know what Labor Day is about.
What is it? I genuinely don't know. It's just one of those things that you just use the phrase, and I have never given it a great deal of thought.
Yeah, it's a bit anachronistic, to be honest, because it was 1856. The public sector earned the right for an 8-hour working day.
Oh.
So what's that, 170 years ago, 165, 170 years ago? and we're still celebrating it.
Any excuse for a public holiday.
That's right. Now, of course, Victoria was open yesterday. That state had a holiday on Friday before the AFL Grand Final. Western Australia, Tasmania and Northern Territory citizens were also at work yesterday. Confused? Yeah, me too. Anyway, trading was subdued. By the close, the market was down 0.2% to 7,033 points. Worst was Coronado Global. More on that later. Domino's Pizza was off 3.7%. Best was Sayona Mining, up 10%. Among the large caps, CSL, Woolies and QBE all fell more than 1%. Industrial Property Group Goodman was up more than 1%, while iron ore major Rio Tinto rose 0.9%, but really not a lot going on.
Well, what about international markets?
Well, I haven't really followed commodity prices over the past month while I was away. So what's happening in oil has really taken me by surprise. Brent crude's trading around $92 a barrel. Everyone says it's heading towards $100 a barrel. It's up about 30% in the past 3 months. Quite the rise. Gold's trading around $1,840 an ounce. Cryptocurrencies have had a relatively stable month or so, at least by their standards. Bitcoin's buying around $28,000 a unit. And the Aussie dollar certainly doesn't seem to have any friends. It's at just over 64 US cents.
All right, there's a bit happening. We'll be back in a moment with the rest of the day's business news. Sean, while home prices have rebounded with some cities hitting new highs last month, the upper end of the market is losing a little bit of steam.
That's right. The upper quartile, the top 25% of the capital city housing market, led the recovery earlier this year. Now, its pace of growth is slowing. So in the September quarter, the most expensive 25% of homes rose 2.3% on average, while the cheapest 25%, the cheapest quartile, they're up 3.2%. That's quite a bit higher. In Sydney and Melbourne, the middle of the market is actually recording the highest growth rate. This is according to CoreLogic. It seems that affordability factors, in part thanks to higher interest rates, are really kicking in at the moment. CoreLogic released its full September quarter house price data yesterday. It shows growth has eased from 3% during the June quarter to just over 2% last quarter. Adelaide is leading the way, followed by Brisbane and Perth. Sydney's next, followed by Melbourne and Canberra. Hobart, however, is going backwards.
Now, the Reserve Bank meets today to deliberate on interest rates, with pretty much everyone expecting the official cash rate to remain on hold at 4.1%. What will get plenty of attention, though, is how much change is in the accompanying statement, particularly since the central bank has a new governor, Michelle Bullock.
Bullock's under a bit of pressure, I'd say. She needs to demonstrate her inflation-fighting credentials. Hence, the Reserve Bank statement is likely to continue to say that price rises remain stubbornly high and rates need to stay higher for longer. But she also has an opportunity to break away from her predecessor, Phil Lowe, and subtly refine how the Reserve Bank thinks about inflation and full employment. That's its two goals. Bullock is politically savvy. She's watched the actions of Treasurer Jim Chalmers and his relationship with Lowe, and will have to be wary about, shall we say, doing a better job getting on with her boss. Anyway, the statement comes out at 2:30 p.m. today. No rate rise expected, but the statement will be read very closely, probably closer than most other statements in recent times, just to see the impact that Bullock has had.
I look forward to hearing about it in the afternoon report this afternoon, Sean.
Indeed, yes. I'll tell you all about it.
Now, early polling on the Voice referendum opened yesterday, and Prime Minister Anthony Albanese used it as an opportunity to reaffirm his support for the Voice.
Yes. Now, hundreds of early voting centres across Victoria, the Northern Territory, Tasmania and Western Australia opened yesterday ahead of the referendum. On October 14, polls will open in New South Wales, the ACT, Queensland and South Australia today. That's to those who are eligible to cast an early vote. Albanese warned Australians against believing all the arguments that the No campaign had put forward, and instead encouraged voters to consider the actual question to which they will respond. He said everyone wins if the vote gets up, while a no vote will bring only division and pain. In the referendum, remember, voters are being asked whether they support a proposed law to change the Constitution to recognise the First Peoples of Australia by establishing an Aboriginal and Torres Strait Islander advisory body in Parliament. We are not advocating one way or another. We are advocating for people to be informed when they vote.
Yeah, well said. Now, there's a bit happening in state politics at the moment, Sean. Victoria's new Premier, Jacinta Allen, unveiled her new cabinet yesterday with Assistant Treasurer Danny Pearson taking on the massive transport job.
It's a big spending portfolio, including the controversial $200 billion suburban rail link. The new Premier, Jacinta Allen, had held that job. Now, the Deputy Premier, Ben Carroll, has picked up the portfolios of education and medical research. He will be busy, as is not unusual in politics, particularly in Victoria, I'd say. Much of the discussion yesterday after the announcement was less about the people, less about the policy, more about how the different factions fared.
And in Tasmania, Premier Jeremy Rockcliffe said the fate of his minority government, the last standing Liberal government in the country, is in the hands of the state's former Attorney General.
Bit of a mess, this one. Elise Archer on Friday said she would resign after bullying allegations against her and claimed she sent inappropriate text messages started to become public. Then, on Sunday, she indicated she was reconsidering her decision and wondering whether to sit in Parliament as an independent. The government holds just 10 of 25 seats in the lower house, making it extremely vulnerable to losing a vote of no confidence on the floor. Not helping, The Australian yesterday reported Ms Archer is open to supporting a vote of no confidence in the government if she stays as an independent.
Yeah, I think you're right. That sounds like an absolute mess.
It is.
Now, in corporate news, you mentioned this one in passing before, Sean. Coal producer Coronado Global Resources cut its annual production guidance and flagged higher mining costs, sending its share price down nearly 5% yesterday.
Its Buchanan mine in the US was hit by adverse operating conditions, while the Curragh mining complex in Queensland experienced unexpected downtime for repairs. Never good for a miner. The company said it hoped to recover as much of the lost tonnes as possible as it lowered its production and capital expenditure guidance for this financial year, while hiking up its average mining cost forecast.
The South African owners of Country Road Group, whose fashion brands include Country Road and Witchery and your favourite, Sean, Mimco, have unveiled plans to transform the business into a lifestyle brand house, investing up to $82 million to improve operations, open new stores and potentially expand overseas.
I'm going to feel like an idiot. What is Mimco? I have seen Mimco. It's clothing, but...
Is it? I thought it was mostly kind of...
Oh, no, you're right, bags, accessories and jewellery for women.
Bags and accessories. I thought it was... Because I've always heard female relatives refer to kind of like Mimco clutches and things.
Oh, a Mimco clutch?
Yes. And that is the extent of my Mimco knowledge. I was hoping by suggesting that it was in fact your favourite that you would know more than me and would be able to fill me in. Instead, we have both been found wanting.
Yes. Now, of course, the Country Road Group, which we're talking about, is owned by Woolworths Holdings, the South African organisation. It sold DJs last year to private equity for $100 million, so it's now much more focused on CRG, Country Road Group. That's according to a report in The Australian. For example, the Witchery, Politics, Trenry and Mimco brands, as well as Country Road Kids and Country Road Home, have re-entered My Department stores. Country Road Group has also launched a wholesale model to broaden its products reach to more regional towns in Australia. Last year, Country Road Group sales rose 12%. Pretty good. A strong performance, particularly from Country Road itself, the retailer, Politics and Witchery.
All right, now from Mimco clutches to a big weekend of sport. Sean, well done to the Collingwood Magpies and Penrith Panthers in their respective grand finals. Europe won golf's Ryder Cup over the US, and Australia's minuscule chance of reaching the quarterfinals in the Rugby World Cup remain alive after the Wallabies beat Portugal. But, Sean, the biggest loser over the weekend may well be online bookmaker Betr, B-E-T-R, Betr.
Yes, tens of thousands of punters took advantage of a launch offer earlier in the year from Betr that gave 100-1 odds of Penrith winning the Rugby League Grand Final this year. Now, of course, Penrith won the previous 2 years, so the odds were generous, to say the least. The maximum bet was $10, but $10 at 100-1, that's a $1,000 win. According to the Financial Review, Betr's payout on the Panthers win will top $40 million, which will probably be the largest payout in the history of Australian sports gambling. Late last week, Betr was offering hundreds of dollars of cash ahead of the game to punters if they cashed out early. It did tell punters that it could take weeks for the winnings, to be delivered into their accounts.
Can you just imagine in the Betr boardroom during the grand final on Sunday? just the those final kind of couple of minutes of the game and just the heads in hands.
Ah, yes. I mean, it's a kind of a new brand in Australian online gaming. Not a good first year.
No, certainly not. Now, in international news, the royal family's official website, Sean, went down over the weekend after it was targeted by Russian hackers.
Hacker Killmilk, the purported leader of the Russian hacktivist group Killnet, so Killmilk leads Killnet, took responsibility for the attack, claiming it was an attack on pedophiles. The royal.uk website went down for about 90 minutes, but no access to the site, systems or content was gained, according to UK media. A royal source told the Daily Mirror that the website was down due to a denial of service attack. Now, a denial of service attack, basically sites are bombarded with traffic, as opposed to hacking. In the case of hacking, people actually gain access to the site. That's not the case here. Killnet, a pro-Kremlin group, is known for its distributed denial of service campaigns against countries who are supporting Ukraine.
And finally, Sean, forget road rage. The new phenomenon taking over car drivers is charge rage, with British service stations introducing marshals to referee fights between EV drivers battling for access to the plug-in points.
Referee, maybe I'm overstating it there, but yeah, just keep the teams apart or something or other. Moto is one of the big service station owners over there. Its chief executive, Ken McMeekin, warned that UK's motorway service stations are facing growing public disorder due to a lack of grid connections, preventing him and others from installing enough car chargers to meet the surge in demand, according to a story in the Telegraph of London. It means many motorists are facing long waits, with angry drivers confronting staff and each other over the lack of charging facilities. Now, electric car drivers were forced to queue up for up to 6 hours at some service stations across the UK last Christmas. Unlike a petrol or diesel engine that takes just a few minutes to fill, a typical electric car will take at least half an hour to recharge. Moto, which runs 49 motorway services around the UK, has already introduced marshals at some stations to basically prevent conflicts.
I honestly don't know where to go with that one. It's a bit of a sad reflection on people's patience, I suppose.
Yeah, I mean, it is the real problem. I remember we interviewed, just can't remember, they're a company out of Queensland who are producing charging stations. And I remember the chairwoman, she said, really the issue is the time it takes to charge. This is about 2 years ago we spoke to her. And it's always stuck with me. She said, we need to get to the point that you can charge a car in about the same time as you can fill up a tank of petrol, 3 or 4 minutes. And we're a long way from that.
Oh, it's a fascinating story. Now, up next is the Fear and Greed Daily interview with Sherelle Murphy from EY, a terrific look, basically, at how weather affects the Australian economy now that we are officially in El Nino, but also looking well ahead into the future as the climate changes and how Australia can prepare in order to really future-proof its economy. It is coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It is Tuesday, the 3rd of October, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X, and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.